Welcome to the Business Finance Bulletin, episode 221. The latest Business Finance Bulletin with me, Rob Warlow from Business Loan Services, the commercial finance expert. In this bulletin, Hitachi Capital to offer franchise finance support, bank lending to businesses continues to fall, and are you getting the most from your business savings? When it comes to starting a business, one option is to purchase a franchise. Now, a franchise, as we know, is essentially a business in a box. You have everything that you need in order to get the business started. You get all the manuals, systems and processes, marketing support, and also general growth support from the head office. Now, when it comes to raising finance, it can be a little bit challenging, especially if you're a first-time business owner. Well, Hitachi Capital, who are an asset finance and invoice discounter provider, have announced the acquisition of Franchise Finance Ltd. Now, Franchise Finance provide dedicated support to people who are looking to purchase franchises. They run a training academy. They'll help you prepare the business plan, and they'll also help you raise the finance. Now, Franchise Finance have been going for about 5 years. They've done 700 deals and raised about £32 million. So by adding this to Hitachi Capital's already extensive product suite, they filled a nice gap and identified a really good opportunity in the marketplace for people looking for support. If you want to know more and you're looking to buy a franchise, first of all, go along to the Franchise Finance website, which is franchisefinance.co.uk, or alternatively, go along to the Hitachi Capital website, which is hitachicapital.co.uk. In my previous bulletin, episode 220, I reviewed findings from the SME Finance Monitor team, which revealed that appetite to borrow amongst UK small businesses was on the wane. Well, it seems that this trend is continuing, as confirmed by the latest figures from UK Finance. Now, UK Finance is the umbrella organisation for all of the main high street lenders, and it's taken a look at the total amount of borrowing to UK businesses as at the end of May 2018 compared to the end of May 2017. And the report reveals that there's been a contraction in total borrowing to businesses of 2.5%, a fall of 2.5%. Now, that's a significant reduction over 12 months. So what does this mean? Well, it's probably a combination of two factors. First of all, UK Finance will only consolidate figures from the main high street lenders, so it excludes borrowing from some of the new challenger or peer-to-peer lenders. Now, they're taking up a fair bit of the slack, so it may be that borrowing has been diverted from high street to the alternative lenders. Also, it could be a fact that business owners are not feeling that confident about the future and therefore are holding back on investment plans, which of course is not good for the economy. The report also reveals that bank deposits, money held on savings accounts and current accounts, has increased by 3.1%. So we can see bank borrowing is down and savings are up. So that means that business owners repaying debt or not borrowing, but replenishing cash and building up cash reserves. So I think we're going to be in for an interesting remainder 6 months of 2018, and it's really important now that the government gives some clarity around Brexit to get business owners borrowing again to get the economy growing. In the previous segment, I highlighted the fact that businesses are holding on to more cash, with bank deposits and money on current account up 3% over the last 12 months to May 2018. So businesses are holding on to much more cash. But of course, the question now is, are you maximising the return? Well, Aldermore Bank has done some recent research and found that 62% of businesses are not earning interest on their savings. Now, it could be that businesses feel interest rates are too low and it's really not worth the effort, but you are missing out. Furthermore, 65% of businesses are saying that when they have got savings accounts, they are with the same bank that their main current account is with. Now, typically a high street bank won't be offering market beating rates. So if you are sitting on money, it really does pay you to shop around and have a look at some other providers. Now, let's take Aldermore Bank, for example. As I record this, currently an instant access account is paying 0.85%, and I bet that that's much more than your high street bank is offering. So do take a look around to make sure that you're maximising the return from your savings, because every pound really does count in today's business environment. Well, that's it for another bulletin. As ever, I hope you enjoyed it. And if you did, please don't forget to give it a like and a share. So that's it. Look forward to being with you next time. In the meantime, have a great, successful and profitable week.